Boom, we are alive, ladies and gentlemen. So we're going to be taking a look at individual tokens as we go. And so these are going to be shorter videos and they're going to be pre-recorded. We'll still do live ones, but just going to try to do these deep dives. Today, we're going over Cardano. Now, we had Charles Hoskinson on the show about a month and a half ago. You can check out that podcast by subscribing to this channel and going to the front page. But what we're going to do here now is take a look at Cardano on the daily and boom. And this is what you can see. So we here at the Bear family love studying Wyckoff trading ranges, and there's some useful and valuable information that I want to go over here because there's a very important learning opportunity I think in front of us with Cardano. Now, because we study the Wyckoff trading ranges, we look at the market in three very distinct cycles. It's on the left-hand side of the screen here, usually market accumulation, which goes up into price markup. It usually goes into forms of reaccumulation, and then you have a final jet up and then distribution to where the price will come down lower, something like this. This is quite often what an ideal market cycle looks like. You can even simplify it just to accumulation, up, and then into distribution. So right now, we know we have data back here from March when we had our primary spring. This would be the pandemic. This would measure the middle of phase C during our first accumulation range. And as we go up, we have these big moments of reaccumulation before final markup. Now, in the smaller time frames, if you were joining us back in December, we were following these horizontal trading ranges down here and down here that were also bullish. And this is important to understand because reaccumulation happens on different styles of time frames, but right now this is the one that's the most important. And there's some key characteristics that we want to keep an eye on here. And I think Cardano provides a great example. Now, I don't know what the answer is here, but we've talked about the supply characteristics in many of our videos before. And one of our main points of interest here is actually this massive amount of supply that came into the run-up. Now, I had been thinking that this might be an upthrust and distribution. And it still could play out that way, although I'm actually leaning to believe that this was the spring, effectively, of this trading range. And what's unique, and I think kind of what I had made a mistake was just the amount of time some of these take. Like, we want to get super excited. We're like, yeah, here's our buying climax, here's our upthrust, here's our primary support, our buying climax, our secondary test, our spring, and then that we were going to move into a bullish situation as we got to the top of the box here. But now looking at it, I actually think that this is just the run into resistance. And this was your first automatic rally off of the secondary test. So likely what we get is a move that breaks below, or it just stays in this area, not even below. It just stays in this area of this POC for another period of time. And then Cardano is likely going to jump above the box, close, and go much, much higher. So what's interesting here is that it does align with the idea that we are pretty much right dead center in the middle of this bull market. And we want to make some assumptions just about how high we could go. Now, we've done this in the past, but I want to go over and do kind of a bunch of things. And it's usually from our first primary SOS back down to the bottom of the price range, which is around 3 to 4 cents for its top. So here's where we can see we've hit into this layer of the 4236. So this was where we are at right now is the first major extension of the primary SOS we had out of the box at the beginning of this trading range, around the 4236 all the way down to the 2618. And we've been holding strong here. Now, I feel more and more confident that if this was a distributional phase, it would have clocked below 92 cents here and started to go down already, which again leads me to believe that the ideal market cycle we're going to see here was the accumulation, which was this area down here, move up into this area of reaccumulation, and then one big final move upwards before we have the end stage of distribution itself. So again, we have accumulation on the bottom and distribution at the top, and in the middle here there's this giant reaccumulation range, which is what we're talking about now. And the reason why reaccumulation is kind of a difficult and tricky conversation is because of its apparent relationship with reaccumulation, and they look so similar, and they're very difficult to tell apart because we're in the middle of the bull market, right? So this could have been an upthrust and a distribution, but the way we reacted to the top of this trading range looks much more like a spring, and you can see it in the depth of the candle wick right here. And that's an interesting thing. This is really interesting and important to keep in mind. We also have to recognize that big money players showed up a little later to just the general accumulation in this sector as well anyways. So this upthrust and this movement now is probably leading into a bigger play. We're going to go over Matic and a few other tokens over the next few days that have formed really nice reaccumulation patterns and then did break to the upside. But I figured we'd go over Cardano today. So one of the other important factors is actually this rising price on falling supply again. So sometimes it can be a little disconcerting because of the relationship of reaccumulation and distribution. They're almost so similar. You really want key closes above trading ranges to be more and more bullish, right? So this looks like the spring to me, just the amount of sell supply that came in and the inability to break below the trading range at the bottom and stay below the point of control in the middle of the trading range here. And that's hyper important. The fact that we've gotten back above the POC is leading into a much more bullish scenario. So we're probably about to get some retests and a few of the tokens over the next 24 hours just to test some of these areas of strength and support. And we've seen that in other more areas that we'll go over here. But Cardano is looking great. So how high could we go? And this is probably how we'll end the video here. Let's go with a realistic price target based off where we're at today. So because we're already up significantly, we measure even back from September, we're up 1,600%. And in fact, if we go back to the spring of March 2020 when the pandemic started, we're significantly higher, 14,000% almost on Cardano. So anyone who's a Bitcoin maximalist out there just doesn't like making extra capital. Sorry, let's go 5,000%. That feels a little cleaner. It's very unlikely you'd get in on the wick of that March spring anyways. So around 5,000% for Cardano. So it's performed very well. But again, we're up really high. A 50x is fucking huge. So the next thing we're about to do is take a little bit of an outlandish gander at the potential as if we go up. And again, remember this trading range right here, it could very well turn into a distribution, although we're just with how the market is situated right now. And again, this, what I believe to be kind of the idealized market cycle, which is accumulation, reaccumulation, up, and then distribution, kind of like a 3-part cycle. And then most commonly, we look at it as 2 cycles, just accumulation and distribution. But here, I think it's really important to notice this horizontal trading range that we have in the middle of the screen right now. So where does that bring us? Well, the extensions as we get higher get harder and harder because the bandwidth and the amount of capital to move it is quite significant. We will be lucky if we can get to the $4 to $6 mark, but that's it. I don't think we can go any higher on Cardano between the 2, the 4, the $5 and the $6. Like this is like absolute insanity, because you have to remember that to go from where we are today up there is another 300%, and that's a little unlikely, but it is possible. What is usually more likely at these larger extensions is usually at least the 1,618, so around $2.35. It's like a very, very respectable conservative jump on this trading range to go up to the 1,618. But the 2,618 and the 3,618 are also possible in the volatile range of this crypto sector, with tons of money sloshing around, retail investors left, right, and center. There's a lot of room for crazy volatility and price action. But I'm putting a pretty clear marker here between $3 and $3.50 for what I would consider a nice market top, effectively, for Cardano. Anyways, we'll leave it at that. Hope you guys enjoyed today's shorter episode again. If you have any other tokens you would like me to take a look at, I'm going to start doing more of these kind of intermittent daily updates that take about 15 minutes each, so you guys can digest and look at the tokens that you're interested in. I'll try to do as many as I can when I feel like I want to. And then, yeah, go to all the social media channels down below. Whether it's LinkedIn, Twitter, or Instagram, please give us a follow and support the Arcane Bear family. We're always growing to bring more valuable content to you wherever you happen to be in the world. So follow us at the Arcane Bear. If you haven't yet followed us on YouTube, I don't know what it is you're doing, but click that subscribe button, give us the thumbs up, and leave your comments and thoughts down below. This is Tia with the Arcane Bear. We will see you guys again on the next episode.